Welcome to the 1% Better Everyday Podcast. I'm RJ Malik, your producer. Our guest today has spent more than 2 decades serving advisors from nearly every angle in this industry. Most recently, he served as president of Kestra Financial. Today, he leads Seaport Consulting Partners. Please welcome Stephen Langlois. Chip, it's all up to you. I'm passing the baton over, so take it away.
Thank you, RJ. Stephen, welcome.
Thank you. I'm glad to be here. I'm touched that you wanted to talk.
It's interesting because we go all the way back to college, but I found you're one of the people who
20 years ago in college.
20 years ago.
Yeah.
You're one of those people that has super insightful things that you think about as it relates to wealth management. And I'm super excited to have you on the show and kind of get into a Q&A and have some great conversation.
I am too. Hopefully I'll be insightful. I don't know. I'm not sure my family would agree with you, but that's okay.
I have that issue as well. But anyway, all right. Hey, let's look at the first question, right? And that I have. And, kind of when I went back and did some research on what you've done, I was like, wow, you have been at a number of places, LPL, Fidelity, eMoney, and you've won at all of them in my mind. And so, but I'm really, really kind of interested in kind of what you think and what has that journey taught you about what advisors really need.
Mm-hmm.
And, if I keep going down that path, you couldn't have learned any more with your journey.
Yeah, no, you know what? I first of all, I love what advisors do. I really do think there is no more noble profession out there. I mean, these guys and gals are absolutely the doctors and nurses of finance and do incredible things for Main Street Americans. I just think it's amazing what they do. And as I think about over time, not only in wealth, in particular in wealth, like, one of the things that I've learned and seen is there are so many ways to win. And I used to work with this crazy guy at LPL, Lincoln Anderson. He was our chief investment officer. And he would say, no one has a lock on the truth. And I extend that to ways to win, that there are multiple ways to win. And there is no one right way to be successful in this business. I think as long as you have integrity and, follow the rules but most importantly, do right by your clients and stay focused on what is right for your clients. And I think you do that by delivering. The people who win are those who deliver tangible value to their clients. And that takes many different forms. For some people, tangible value is outperformance on a portfolio. For other people, tangible value is help me send my kids to college, help me retire and buy that boat or whatever it is. And I think that there are the people that do it well are those that listen to their clients, that serve them authentically, and keep, think about this as a business. This is definitely a space that we've evolved from being a practice to being a business. And I always think, you never want to say this is my practice, because I don't want to hear my doctor saying I'm practicing on you, right? No, this is my business. And so, but I think all great businesses kind of come back to, are you doing right by your client? You could be providing wealth management services, selling credit cards, selling cars, whatever it is. It's are you delivering value to the customer? And I learned this way back, in the day when I worked at Bain & Company, the consulting firm. And I worked with this guy, Fred Reichheld. He was the father of this thing, which was novel at the time. That's how old I am, called the Net Promoter Score. Fred invented the Net Promoter Score. And at the end of the day, what Fred learned was that you can't say, are you satisfied? That's not a fair question. It is, would you recommend this service, this product, this whatever to your friends and family. And if on a scale of 0 to 10, and if you gave it a 9 or a 10, you are a promoter. And those people that were promoters grew much more quickly than those who weren't. And that's what that manifests. Are you adding value to your customers? So I think that's important. The second thing, as I reflect over time, is facts and data matter. Like, you have to build a strategy, build a business around facts and data, not emotion. Not emotion. Because at the end of the day, the path will get revealed by really truly looking at the facts and the data underneath each business situation or opportunity. And it takes a little additional work to understand, I think, develop a fact-based strategy or a business plan. But at the end of the day, I think it serves people well to push that pencil and be ruthless about what is going on in a business. And then I guess the other thing I think about, Chip, is these, at the end of the day, are service businesses. Financial advisors are providing services, right? They're not selling a phone or some widget. It's service. And service is enabled by people. And so I think as important as how you treat your customers, it's how you treat your people. Because your customers are going to feel whether your people, your team is feeling motivated, is feeling valued, is learning. And that, I think, is what separates great firms from mediocre firms is firms that really treat their people well. And create a career path, enable them to have impact, enable them to really participate in the value creation process, right? I love when you see these firms that bring the juniors in to meet with clients. Don't keep them back in the back room. Like, let them see how the sausage is made, what those client experiences really are, and they will become better professionals as a result.
That was super. One of the things I look at what you just said is succession planning, right? Big problem these days. And getting those junior advisors in the mix, not only helps with serving the client, right, but potentially even starting them on their own book in some way, shape, or form.
Yeah. And when we're appropriate, I've seen this before, like, bring in some of the ops people into the client meeting, right? At the end of the day, who's filling out the paperwork, right? Who's processing all that stuff? It's not just the people that are the advisors or even the junior advisors. It's the folks who are the CSAs and others, and have them have exposure to clients. Because I think that it just also gives people a little more purpose and understand, why we're asking them to do what they're doing.
Absolutely. I'm going to throw this in, and I'm interested to hear your perspective. But if you look at the last 20 years, how do you see the role of the advisor changing?
So when I left Bain and came into this space, I went to work for this just wonderful firm called Scudder, Stevens and Clark. It was described to me by the headhunter actually for this role as there's this stodgy little investment firm downtown in Boston that's looking for somebody, right? And Scudder was one of the first firms that actually invented the mutual fund, but it was an investment management firm. And although it did actually have a private client business, it was one of the earliest. It was called Scudder Private Investment Services. And so we came at everything. It was all about returns, right? Are the returns of the portfolio beating the benchmark? And that was not only because of what we did, but also that's how advisors really, at the end of the day, measured their success. Am I beating the benchmark? And that was in the 90s, pre-dot-com. And everything was all about, returns. I think what's changed is now it's about, are you helping me achieve my goals? And are you, and there's this construct that Fidelity actually built off a Bain concept of the value stack called the advice value stack. And at the foundation of it is investment management. And then it's, are you achieving your goals? Are you achieving purpose? And then leaving a legacy. And those are the higher levels of the value stack. And the data, I'll talk about data. The data shows that consumers place different levels of value on the value stack. They place more value on the higher levels of the value stack. But what's interesting, and I think it's a generational thing, Chip. I guess I'm a boomer. Yeah, you're almost a boomer. So boomers.
I'm still X. Thank you.
You're X? Okay, good. Okay. The boomers place a disproportionate amount of value on investments, on investment returns. Whereas X and millennials in particular, that's found isn't as important as a goal achievement, achieving a life's purpose and leaving a legacy. And so the value stack is getting flipped. And that's what's changing, I think, is today advisors are evaluated on how are they doing to help you achieve those other levels of goals. And a lot of these young people don't really care about the investment portfolio per se. It's all about the other stuff.
Right.
Now, the other stuff, though, is where it takes a lot of time. Doesn't take a lot of time to manage a discretionary portfolio. No disrespect to portfolio managers out there. But that stuff is relatively, the time stuff is on the higher levels of the value stack. But that's where the disproportionate value is for younger investors in particular.
Having a financial coach.
Yeah.
I'm going to shift gears a little bit, Stephen. One of the things I found fascinating when you did leave Kestra was that you joined the Holistiplan board. And to me, that says something, but I'd love to hear how that decision reflects kind of where you think comprehensive planning is heading and why it matters so much right now.
So, you can tell I'm a big believer in planning. I even had the religion before eMoney, but I think that there is, Holistiplan is exciting to me because they have a very specialized planning capability around taxes, right? And I got to tell you, you lower someone's taxes, that is certain alpha. And I mean, it really is. It's dollar for dollar, like real tangible value. And increasingly consumers look to their advisors to help them with that. Their financial advisors, like they want their CPAs to do their taxes. But they really, I think more and more they look to advisors to say, like, how can we, add more value, create more value here by managing things in a tax efficient way. And so I think advisors are in a unique position to add that value, but they need tools because they aren't trained tax experts. Unless you're like your CPA who we evolved into a wealth management role. So I was excited because I thought that the Holistiplan team had a real clear vision and value around how you can add alpha through taxes, how you can scale it, importantly, with software, and make it accessible for advisors who are not tax experts and to their customers. So that was it. I also, Roger Pine's the CEO. He was an advisor who had this insight, built the software. To me, it was analogous to what, Edmund Walters was the founder of eMoney. He was an advisor. He had a better way of doing it, right? Off yellow pads and Excel files into proper software. So there were similarities that kind of attracted me. And I really, really liked the team. So that's kind of what I saw in Holistiplan.
No, and it's fascinating how in all our roundtables that we're having right now, planning is coming up and how to weave more tax optimization services in.
And it's a category that has not been that penetrated. So if you look at the last T3 thing, market survey, like less than 50% of advisors use a specialized tax planning tool. So there's a lot of white space for growth in the category. I think, and Holistiplan is the market leader, and they're well positioned for that growth. So I think there's a lot more opportunity for folks. It's kind of where eMoney was when we bought eMoney was at Fidelity. I think we had like 25,000 users. That was it. It was a distant number two. Now they're the number one ahead of Money Guide. But it's exciting. It's a fun space.
It absolutely is. You and I have both interacted together in the independent channel for the last decade or so. As you're advising firms and you are seeing the industry move much like I am, okay, very quickly,
Mm-hmm.
what do you see the next 5 years looking like for the firms you may be advising?
I have a strong belief there is always a bull market for financial advice. I think the world is, I think we can agree, the world is not getting any simpler. Um, and American households need support and advice. And as we know, the number of financial advisors at best is flat and is generally going down. I mean, it's a shame to me that more people aren't getting into the business. But I think that creates business opportunity. So for advisors to continue to drive growth. But the big challenge is going to be, a lot of advisors, look like definitely like me and less so like you. They're old, men who are getting ready to retire. And so that gets to the importance of succession planning, right? Of having successors, of thinking about how can I find the right home. I'm an advisor for my business. This is the largest single asset that most financial advisors own. It is their life's work. So it's inherently an emotional decision to think about what am I going to do with my business. And also because many of my clients I've gotten to become very good friends with. So I want to make sure they're well taken care of. So I think that whole succession planning, what's the future of my firm thing is really, really important to think about. The other thing is, how do I create more capacity in my business and in the industry? And that's where I think AI is just going to have a profound impact on advisors. I think the people need to really keep an open mind about how to use AI in their businesses, because it can create so much capacity and help them meet that demand for financial advice, which is out there. And at the end of the day, if they want to monetize and sell their firms, the biggest driver of valuation is organic growth. It's not asset growth. It's true organic cash flow growth of, am I gathering more assets? Not, am I just riding the wave of the market? And so it's finding capacity to serve more clients, to find more clients. It's going to be important. And AI can play in that in a big way. So I'm encouraging people to be, to experiment, to try some of these new tools, really be rigorous about understanding how much capacity it's freeing up and taking advantage of that. Now, some guys and gals will use that to go golf more or whatever, but the people that want to drive their businesses and grow more, they will have more time, and it'll make it a little easier for them to do their business without compromising the integrity of the solution that they offer their clients. I would argue like some of these note-taking apps and stuff like that, it helps you be a better advisor, because actually, I don't know about you, Chip, but me, I forget stuff from time to time. And so when the AI generated some note summary reminds me of the things that are important to the clients, it's would be really, really helpful.
Yeah, I would add into that guidelines and guardrails for AI.
Yes.
For wealth firms.
Yeah. Sorry. Yeah. Well, generally your compliance officer is going to help you with that, but yes.
I've been having lots of questions with firms about this direct subject.
Yes. Yeah. And understanding what the software provider is doing around that stuff is really, really, really important.
I always love to ask this question. Who are the people and companies that impress you out in the marketplace today? And what are they doing that other firms may not be doing that folks should pay attention to?
Well, so this is not an ad for my former employer, but I think James Poor and the team at Kestra are doing amazing, amazing things. And while I knew of Kestra before I joined the firm, I had met 10 years before I met James in the back of a bus at a Fidelity client event. and I knew one side of Kestra serving it when we were at Fidelity and eMoney. But what I didn't appreciate was the power of focus. And what makes that business, whether it be the Kestra side of the business or the Blue Spring side of the business, great, is a maniacal focus on what we do well and what we don't do well. And yet you do things that contribute to the things that you do well, and you stay away from the stuff that doesn't help you do well. And I think that's what has allowed that firm to be, as successful as it is with its advisors, and then really importantly with its private equity investors. I mean, the returns that Kestra has generated for its private equity investors and the senior management that are there are just amazing. So I think they're doing really, really well. I think to get to the AI thing, I think Mark Gilbert and the team at Zox are doing really great forward-thinking work on how you take this technology and, as you said, in a safe way, apply it to create value for advisors and their clients. What they do with that software around note taking and then extending it into other areas, I think is really going to have a profound impact on the industry, and look forward to following that. The other team that I think are doing great stuff is, we all know alternatives, right, are growing in importance in clients' portfolios. And I think the iCapital team, Lawrence Calcano is the leader there. They are doing great things to make it simpler for financial advisors to implement alts appropriately in client portfolios. Again, coming at it from a technology angle, but really understanding the advice delivery process. I think they've done a good job there.
Mm-hmm.
I think the Mercer team's doing good stuff on really building a scale national RIA, in a thoughtful way. I mean, there's so much activity going on in the RIA aggregator space, multiple different models out there. But they're doing a great job, I think, as well.
That is wonderful. I love that feedback.
Yeah.
So as we close, we always like to give you the 1% better flash time, 90 seconds, unscripted. You can talk about anything you want in that time.
One of the things that I think is really important is really recognizing and valuing the fact that what makes a difference in this industry is the people. And it's a small industry with great people. And it's a lot about relationships. I mean, Chip, it's like how you and I reconnected, right?
Absolutely.
Having first met in Mayflower Hill in Waterville, Maine. And then we came back for a very memorable evening up in Sonoma that might have involved a fair amount of red liquid. But anyway.
That would be true.
And it wasn't blood. It's the people. Take the time to understand what motivates people and how they make decisions. If I think about the most enjoyable part of my as you said, long career, it's been the people.
I did not.
Okay, that was RJ. That was RJ. Sorry. It is the people. And one of the things I love now, and I've tried through my whole career to make connections with people, to learn about them, to ask about it, genuinely ask and be interested in not just their work, but their life. And one of the things I feel really privileged about at this stage of my life is just having more time to reconnect with people, and learn about all of them, no matter what their station is. Cause that's what makes the world go around for me. And I think about, particularly as you become more senior and a little more experienced, of trying to set an example for the people, who are, younger than you, in an organization and in a business. And that's the thing I just don't think you can replace. It's what makes doing this stuff really fun.
100% agree. I love that.
I don't know. It's not a profound thought, but don't forget the people. don't forget the people.
Well, Stephen, we've loved having you on the show. And I can't thank you enough for taking the time with us.
Well, thank you. It's been a privilege to be here. Thank you so much for thinking of me.
Love chatting with him. He always brings new ideas to my mind.
It was fun listening to you two talk, knowing that you have quite a history. So it was enjoyable to sit back and just hear you two discuss what's going on. It was interesting. In the very beginning, he compared advisors, financial advisors, to the doctors and nurses. He called them the doctors and nurses of the financial world. And, when I heard that, I was like, wow, that's an interesting take. And then you think about it, it's like, well, yeah, you're taking care of our finances, and if there's something wrong, you're giving us solutions. So in a way, that was a good comparison. And the other thing I enjoyed listening to you discuss was the challenges that your industry is facing with AI, and the fact that there's a lack of financial advisors coming up through the pipeline. I thought that was, and that seems to be a theme, or I shouldn't say a theme, but I've heard that discussion on those topics more than once on your podcasts.
That is true. There's a great need for young advisors to come up into the business. And it's funny because I like to draw a couple takeaways from our conversations. One thing that really kind of set with me was his comment about good advisors help clients in practical ways and do what's best for the client. And I thought that was pretty profound as we focus on all these, whether it's investments or, how do you service? And I just thought that was a pretty basic statement that really rang true. Next, his comment that investor customers are predominantly goal-based these days versus investment return. I really found that interesting, where focuses on goals, tax optimization, and long-term planning, and being able to match up against those goals. And then the last thing I took away, we circled back to it at the end, but it talked about succession. Advisors need to plan for the future. And, areas, in figuring out how to take their businesses and basically be able to give them to the next, or hand them to the next generation. And then AI is going to just kind of change kind of the way advisors work, I think. But, I thought it was a fabulous conversation. And as I get ready to do my normal, to everyone listening, Ted Lasso said it best. Be curious, not judgmental. Stay curious about the people around you, the firms doing things differently, and the work in front of you. That's how you get 1% better every day.
Thanks, Chip. And we need to add in a shout out, as this podcast is brought to you by Beacon Strategies, LLC, the go-to resource for roundtables, consulting, and services that support wealth management firms and their providers. If you need some industry perspective or help, please visit beaconstrategiesllc.com. And again, thank you for listening to the Beacon 1% Better podcast. We ask you to share this podcast, rate it, and leave a review, because this actually helps others find the podcast. Again, thank you for listening. And for Chip Kispert and everyone at Beacon Strategies, I'm RJ Malik, and we look forward to you joining us for our next podcast.